Have you been following the news lately regarding interest rates? There's speculation they may be coming down in the next month. That means it's going to be a lot cheaper to buy a home, right? Well, maybe. Welcome to House Talk on KAFM 88.1 Community Affairs. I'm Kate Porras. I'm a realtor at RE/MAX 4000, and each month I bring in local experts to provide information for home buyers, home sellers, and homeowners here in Mesa County. Thank you so much for joining us. I'm going to get more on that topic regarding interest rates in just a minute with a special guest. But first, we want to take a look at some of the current numbers for our real estate market here in Mesa County. We always like to talk about sales price. It's a big question that people have every time we talk about real estate. Average sales price year to date for Mesa County for a single family home, almost $469,000. So where does that compare to this time last year? That's actually up almost 5%. So if you look at the year to date numbers, those home prices are still climbing just a little bit. If you compare just July, though, July was actually down 5%. So there is some activity month to month depending on the price of the homes that are selling. Percentage of price, list price that's received from these offers, we're looking at about 98%. So for the most part, the list price, the seller is getting most of what they're asking for the sale of their home, but it's taking a little bit longer to get those homes sold. We're looking at about 80 days on market to get a home sold. Our inventory, though, that's been coming up. We've been talking for months and months and months about how the inventory is low. It is still relatively low, but in July, we had 519 homes available for sale. That's up more than 9% compared to the same time last year. So that's good news for people that are out there trying to buy homes. Sold listings, though, a little bit down. Again, it's taken a little bit longer to get those homes sold, so the number of sold listings down just slightly, but still a lot of activity in our market. All right, so where do interest rates come into play when we're talking about some of these numbers? In the studio today with me is Dave Godwin. He is a loan officer with First Street Guild Mortgage. Dave, I'm going to guess that when someone comes in and says, I want a new loan because I want to buy this house, one of the first questions they're going to ask you is, what's your interest rate? Is that correct?
Absolutely. We get that question, like you said, almost every time somebody comes to see us. And my answer to that is it depends on who you are and where you're at on your journey in buying a home. There's a lot of factors that come into an interest rate, whether it's your credit score, how much money you're going to put down, maybe your assets. So it's a very it's a moving mark that we just have to get to know you, build a relationship with, and we can get you those numbers in a timely manner.
We keep hearing in the news, I heard it on some of the national television shows just this morning about the Fed possibly lowering interest rates here in September. But the Fed and home mortgage interest rates, they don't necessarily mean the same thing. Talk to me a little bit about that.
Sure. So people think just because the Fed's making a move that directly affects the mortgage rates. That's not the case. It indirectly affects the mortgage rates. Oftentimes, mortgage companies try to kind of predict and make moves on their own behalf, predicting what the Fed might do. That's where we see the volatile interest rates come into play. So indirectly, how they affect it is, we can't predict a war. We can't predict if there's conflict between our country and another. We can't predict if there's a natural disaster. Those all come into play on how it affects the mortgage industry and interest rates and things like that.
And you mentioned the word volatility. That is something when it comes to interest rates, especially it feels like this year or in the most recent years, we've seen a lot of volatility. What are we seeing in terms of interest rates and volatility?
Sure. And honestly, I think we could walk outside and we see volatility in our community with all sorts of things. That includes mortgages. Before you, traditionally, historically, you could predict somewhat how if rates were going to go up or going to go down. It'd be a very smooth transition. But in today's day and age, it's just not the case. You see a very sharp peaks and valleys as far as our rates. We could quote somebody today at a certain rate on a Monday or a Tuesday, and by Wednesday or Thursday, that rate could change by 0.5% or a full percent.
I know I pulled up a statistic. This is from Mortgage News Daily, and it does show at least since May of this year, we're talking at May. May was a high point for the interest rate. So we're about 7.52% for a 30-year fixed mortgage rate. And that has been trending down. But if you look at it, there's peaks and valleys in that line, but trending down to where we are in August, when this came out, was about 6.52%. So trending in the right direction, but a lot of activity in between there.
Yep, something can happen today or tomorrow that might affect those rates. I do gotta say that all mortgage companies are trying to remain competitive in the market. So they're being diligent, doing their absolute best to remain competitive, trying to tighten up their belts and flex their rates where they can to stay in the market.
You mentioned too that lenders don't necessarily wait for the Fed to make a move before they may make a move with their rates.
Correct.
Explain that a little bit more.
Sure. So, and we've heard it all through the year. Hey, the Fed's going to cut rates by April. Hey, the Fed's are going to cut rates by June. Or hey, and it really hasn't come to fruition. And so, where you see those peaks and valleys is we hear that. So, a mortgage company's anticipating that the Fed's going to make a cut. They're going to start cutting their rates so they can be competitive against the next mortgage company. When that doesn't come to fruition, when the Fed doesn't make those cuts, then you see them, oh, shoot, we have to hike rates back up again for our company. And that's where you get those sharp delineations in the rates, as you see.
So a lot of the talk that we keep hearing, the next one is September. It's going to be this magical month. What have we been seeing in anticipation of what may happen in September?
We're hoping they come down. We're hoping the Fed holds true. They indirectly influence the market. We hope they come down. As you said, they're steadily trending down. So signs are looking good in that side. And we just hope that we can see some good rates to get people into some homes.
You're listening to House Talk on KAFM Grand Junction. In the studio today is Dave Godwin. He's a loan officer with First Street Guild Mortgage right here in Grand Junction. So I know I have several buyers, and as much as you try to educate them and explain, they are insistent on waiting until mortgage rates come down before they will make a move. What are your thoughts on buyers waiting?
Sure, and I think we see it in both our professions where you have all these people right behind the fence waiting for the fence to come down before they commit to buy. But when that fence comes down, now you're flooding the market with buyers. Your inventory is going to go back down. People are going to remain more competitive to purchase those homes. You may or may not see house prices go up trying to deal with that competitive buyer. And again, as you said before, we've seen about a 5% increase in home equity over this last year. So when people are looking at their interest rate, they have to take that into consideration that your house is also accruing money. It's almost like a savings account for you. And it is an accruing investment for you.
I think people are still hoping, even though I can't imagine that we're going to ever see it again in our lifetime, that 3% interest rate that we had a few years ago. Chance of it happening?
You know, I wish I had a crystal ball and I'd be a very famous person, but I don't foresee it being at 3%. If it comes down, great. But I don't foresee those 3% rates like we've had seen in the past.
But they will be hopefully better than what we were seeing with 7. It seemed at one point we were pushing close to almost 8% at one point. So better than that, but just not that, unicorn number of 3%.
Yeah, and absolutely. And like we spoke about before, if we can get you at that lower interest rate and you're looking at the building of your equity into that home, one's paying for the other.
When you talk about rates fluctuating, I would assume then it's a really good idea for buyers to really be in good communication with their loan officer, because at some point you have to lock that rate. You have to say, okay, today's the day we're picking this day.
You have to commit.
You got to commit. So how important is it for a buyer to be in really good communication with their loan officer so they know when to lock? Yeah,
so, this is most often for most people the biggest purchase they're going to make in their lifetime. And it's all about relationships. So develop a good relationship with your loan officer that you can call them, you can get your questions answered. They should have the heart of a teacher and really educate you on the process to include, hey, we should or should not lock the rate right now. Furthermore, as I stated before, mortgage companies, they're businesses and they're going to compete with each other. So they're going to try and offer the best rates, and you need to be educated, and your loan officer should be educating you on, am I really getting the best value in this market?
You're listening to House Talk on KAFM Grand Junction. Again, in the studio today, Dave Godwin, mortgage loan officer with First Street Guild Mortgage here in Grand Junction. I want to talk about that a little bit more because, interest rate, I think, is what people think of when they go to get a loan. But there are so many other things that come into play. And sometimes when these companies are trying to be competitive with each other to draw in customers, they may offer something that sounds amazing. But when you really look at the numbers, it may not actually be the best deal for the buyer. Talk to me about some of those things that you see.
Sure. So a lot of companies want to bedazzle you, like you said, with some really low numbers. But again, the mortgage loan officer should have the heart of a teacher and explain to you, they might offer a 1% buy down, a 1 year 1% buy down. So you may have a great rate for 1 year, and then it goes right back up to that fully amortizing fixed rate that you had. Versus you might go to the next company over, and their rate might be a little bit higher, but it's a fixed 30-year rate. And that fixed 30-year rate is lower than what that other company was offering when that 1 year buy down is over.
And sometimes I know there's also other fees or numbers that come into play. It's not just the interest rate when you're looking to shop for a loan.
Sure. So everything's on the table. Everything's taken into consideration. Some lenders offer different incentives, whether it's for first-time home buyers or public servants of that nature. And I encourage any home buyer, again, this is the largest purchase most people are going to make. Look around, shop around, try and find somebody you can build that relationship with, somebody that's invested in you to get you that home and doesn't want you in a home where the home's going to have you. They want you to get in a home so you have complete control of that home financially and you can build memories in that home.
And I think it's also, I've had clients too where they'll say, hey, this lender's offering me this, but this one's offering me this. And I've just suggested, well, why don't you take this statement from this lender and show it to the other one and make sure you're comparing apples to apples, because sometimes you're not. Then you're not comparing apples to apples.
Absolutely. And both those lenders in that situation, when your client goes and sees them, they should be able to walk out of that office and understand completely what each of those rates see from their respective loan officers that provided them. Heart of a teacher, get them educated, help them get into a home that, again, they can understand and get around.
Are there some things that buyers can do to help them get a better interest rate if we are going to focus on interest rates?
Sure. So obviously credit score comes into play. So if you want a traditional conventional loan, you need that 620 credit score. If you don't have that 620 credit score or higher, we can look at other loans like FHA loans. You don't want to have overwhelming amounts of debt. So not all debt is bad necessarily, but you don't want to have overwhelming amounts of debt. We want to be able to show that you can get into that home comfortably and be able to repay that. And all your income, your monthly income, isn't going to just your mortgage.
And again, I think the topic of this is interest rates, just making sure that you're not just focused on just the rate. There's so many other things that come into play than just the interest rate when it comes to getting a good mortgage.
Absolutely. And I would tie it all together with just that relationship piece with that loan officer. They're the ones that see you through the journey, but the journey doesn't end when you close that loan. When you're in that home and you have a question on if your loan was sold or if you need to make a payment or, hey, maybe rates come down, I need to refinance. Or if I have a VA loan, I need to do an immediate rate reduction loan. You call whoever your loan officer is, and you get that going.
Yeah, we were just discussing a week or so ago, people are refinancing again. It was kind of unheard of for a while because rates had gone up so much, but there are changes in life circumstances, all kinds of, I could list a whole bunch where you might need to refinance. And so you want to, again, have that good relationship.
Absolutely.
Dave, thanks for joining us. If people have any more questions, how can they get a hold of you?
They can go to my website at davegodwinguildmortgage.com, or they can reach out to me at 970-549-6383.
All right, Dave, thanks so much. This segment airs on the second Wednesday of each month. You can also listen to podcasts on demand at kafmcommunityradio.org. And make sure to join us next month for another edition of House Talk. If there's a topic you'd like for me to cover, feel free to give me a call, 970-985-8555. You can also get more information at kateporras.com.